Today we're going to be talking about impulse and retracement. Now, the thing about impulse and retracement is that it explains the reason why whenever price is going, let's say up or down, it doesn't just go up in a straight line for a long time. We notice that anytime the price is going up, what follows, it then has a short movement down that doesn't last long. It's a temporary move and then keeps on going up again and comes down, a temporary move, and keep on going up again. So anytime this is a typical uptrend, that is why your uptrend doesn't always look like this, because of that principle of impulse and retracement. I don't know, they call it wave theory or something, but I don't complicate things for myself. So I've drawn this diagram up. This is an example in an uptrend, and the opposite is the same for the downtrend. So first of all, you have to understand what an impulse is. An impulse is a large move in the direction of the trend. For example, we have an uptrend, right? Price is moving up. Remember I told you an uptrend is when the overall movement of price is going up. So this arrow over here, or this price movement over here, is a large move compared to this small down movement here, because we know the overall movement is going where? Up. So this large move in the direction of the trend is called an impulse. Now, after every impulse, there's always a short-term temporary move. Take note, it doesn't last long. It just moves like down for some time, that's in an uptrend, and then the trend kicks up again and continue moving up. Now, this short-term move is called a retracement or a pullback. It happens every time in the market, and understanding how this pullback works is actually one of the best things I've ever received in trading. Understanding this pullback, that for every movement in the direction of the trend, what follows is a retracement or a pullback. So why does this happen in the market? Let's say someone took a trade here, bought the euro against the USD, and then the price was going up. Yes, he was in profit and the rest. And it's a very normal thing that whenever you're in profit, what will you do some time later? You will definitely take profit. So at the point when price gets to this peak, because of the fact that people have started taking profits, that is why this would start dropping. Why? Because let's say you buy euro NZD at this point, and it was going, and then people started taking profits. You taking profits means that you are selling your euro to buy the NZD, which is favoring the base currency, the quote currency, and is helping the NZD become stronger. Now, when the NZD is becoming stronger, it will make the charts to start showing bearish candles, and that is how the price will start falling. So a particular point that buyers come back into the market and then buys it off, and the the impulse continues. And after moving for some time, people will also take profits, because nobody wants their money to be in the market for a long time. So they take profit, and then price shrinks back a little bit, buy again, and it continues moving like that. That is the simple principle of impulse and retracement. So you should know that for every movement that price is going up, it won't just keep on going up in a straight line. It always moves up, comes down, moves up, and then starts coming down. Now, the way that I trade, I try to capitalize to know when the next impulse move will possibly come. So I have to see a market that is already trending and having what? A pullback. Then I make use of my trend line to try to know where the end of the pullback will occur, will reach, so that I will now be able to take a trade to catch the new impulse move. That is the simple way I trade, and this is all because of the knowledge of what? Impulse and retracement. So let's see how it's applied in live market. So in this euro NZD, you can see how price behaved here. It moved up, came down, moved up, came down, moved up again, and now it's coming down. So in this market, I know that price is currently having a retracement, and definitely, like I said, retracements are temporary, they don't last long. So it's currently moving down, but after moving down for a while, what do I expect price to do? To push back up. So my goal will now be to find, okay, where would this retracement possibly end, so that I will be able to know the next time that it will start moving up and I'll be able to capitalize into it. Let's go to this trade I took yesterday. Let's see how price is and how I was able to find out that trade. So this is how market has been. We've seen price pushing up, coming down, impulse, retracement. We have our impulse, our retracement, impulse, the retracement, another impulse, retracement, and another impulse. So definitely I still know that this market is in an uptrend though. So we had what? A retracement. So because of this retracement, I was now looking for, okay, where would this retracement possibly end so I can place my buys there, which was now finally here, given to me by the trend line, and I was able to take a buy here. So that's the simple principle of retracement, of impulse and retracement. So take this into knowledge and you'll be able to see a lot of things happen in the market. Let's see one more pair. Good. So like you can see, price is currently moving down, but is it moving down in a straight line? No. I know that for every time that price pushes down, there must always be a movement that pushes it back up, pushes it down, also push it back up, and there's a possibility that markets will keep on going down. So wherever trend we are, whether it's an uptrend or a downtrend, the market doesn't move straight. It moves down, up, and the opposite way. So I won't want to fill you in with much information. So take this in, process it, check it in your charts, see how many times it happens. You see it happens here, moving down, up, down, and so on. So that's all for this video. Talk to you later.